what if the AI bubble bursts?
But how do you deal with the fact that AI might be coming after your income?
If the AI gave wrong advice, then what happens? What if the AI has a conflict of interest?
Whether you like it or not, this is going to happen. And you're going to need to participate in it.
Look, AI is backward looking, but creativity is forward looking.
Do you think AI will create the situation where what were already the biggest and most successful firms like the Jane Street, Citadels and so on of the world, they will just become so much more successful?
We ourselves have come from left field, a bunch of people with almost no background in the finance industry that have built something. It should have never been possible. But if it was possible for somebody, then it's possible in the future as well. Invest in yourself because you're the best return that you can get on your money.
The information is very cheap nowadays. Question is judgment. And who applies the judgment?
I think the answer is
Hi everyone, my name is Shrey Chandra and I'm one of the co-founders here at Capital Mind. In today's episode, we're going to take a look at how AI impacts your money and your investments. In the first part of the episode, we're going to look at how you should be using AI or how other people around you are using AI, both for good and for bad, to make better or different investment decisions and more optimizations around their expenses and the like. And in the second part of this episode, we're going to take a look at how AI could be impacting your income stream itself with changing the nature of work, and how your investments and your investments in yourself and your investments in different asset classes and securities should change to adapt to this new world situation. So with that, let's dive in and hear what Deepak and Vashisht have to say. Hi folks and welcome. So earlier today, I got a call from a friend of mine who happens to be a big customer of ours. And the company he worked at, it went public about, a few months ago. And now his options, which are now shares, are finally out of the lockup. And he's allowed to sell them. And the question he was asking is, since the price is generally depressed around the time of these lockups expiring, should he be selling now or should he wait for the stock price to recover and do better in the future? So I did all the normal sensible stuff. I know a lot about this customer already. So I just sort of asked, what do you need the money for? And asked him where his other money was, how it's invested, which I sort of knew to some extent already, and then gave my best judgment on it. But then it occurred to me that my best judgment on this doesn't necessarily correspond to both of your best judgment. Both of you have slightly different opinions on this issue. And I kept wondering, how am I doing anything that's different from this person could just go to Claude or OpenAI and ask the same question and probably get an equally decent answer about this. So I kept wondering what value I'm adding to this conversation at all, in fact, other than just being a human being rather than a bot on this. And I thought I'd just turn that over to you. In the world where these AI tools are just getting better and better every few months, do you think that financial advisors or money managers, I'm not sure what term to use over here or what role I was playing for my friend in this conversation, but do you think that people like us will continue to exist? Should we continue to exist? Or should people just be using AI to answer questions like this? Because the AI will ask them the follow-ups anyway, and you'll have to give the context to get to the answers. So I thought maybe Deepak, let's start with you. What do you think this person should do? And
Yes.
what about us?
There's an interesting problem, especially in the context of AI, because I think if you ask AI very clearly, this is the whole status, should I sell this company? And it might come up with, well, yes, you should sell it. And maybe this is the plan that you have. And then you say, well, no, you know what? I don't want to sell this company. Tell me why I should keep this shares or even in fact buy more. And then it will give you an answer that says, you're right. You should probably buy more because of this. Then you realize sometimes at some point that there is a difference between the human on the other side and the AI on the other side, which is that the AI will want to solve your problem and look at what you're trying to do and say, well, you know what, you want justification for this, I have it. But at the same time, the human might actually go in and say, are you out of your mind? I just told you I don't want you to buy it. The buy reasons may exist, but I am exercising my judgment here and saying sell. That's the thing. AI will get better. At some point, it might come up with clearer answers and say, well, you know what, I just told you this. So I'm not going to tell you the reverse of the earlier one. But then you'll just go to a different AI. And it will give you a contradictory answer like we do to different human beings, right, at some point. So AI in that sense is just the replacement for the sounding board that you had. at the same time, with the difference that the AI is not necessarily unbiased. It's, I think, Vashish, to put it rightly, there's a psychophancy problem of them being your yes men or yes women in that sense, and giving you the right answer. In the particular context, there are so many variables, right? So, for instance, the way I would look at it would be, if you tell me that you have these company shares in isolation, I might have a different view. But if this particular stock is 90% of your portfolio now that's gotten locked up and unlocked, then I look at you and say, listen, you don't work for this company anymore. You just own its shares. You have no control on where it goes going forward. Then maybe you should not have it as 90% of your portfolio, and it needs to come down regardless of whether the company is a great company or not a great company. I may be wrong, but I think it's just a focus for diversification. And then I might put that, it's a suboptimal solution, because I'm not looking at the company and saying, oh no, it can double from here. And then, but I'm just saying, listen, even if it doubles from here, don't make it such a big part of your portfolio. Or on the other hand, you may have a bunch of requirements that you need money for in the near. You may be buying a house, you may be buying a new car, or whatever you need money for, and or your portfolio is not fully diversified, which means you have a bunch of other things, but those other things are concentrated, maybe just FDs, and you don't really want to get rid of those FDs, and you need money to just create the diversification potential even outside of this company that you own. This is a solution that perhaps will not be recommended by anyone in, it's because it's suboptimal. It's like, oh, why are you selling a good company? Why don't you get rid of the FDs instead? And and what is a good company? The public news may be X, but tomorrow some regulator may come and say, oh, you know what, you can't do this business anymore. And the great company now becomes a bad company for whatever reason. And then how do you kind of adjust to those risk factors? AI will eventually help you think through these models. It helps me also. I mean, for instance, asking questions to say, how should I think about them? But in the end, I think you're going to need a little bit of a human piece of advice, especially when there's a situation where there is no one correct answer. And because there's so many correct answers that you almost feel like I need somebody to help me select what's the best correct answer for me, and therefore advice will be necessary. But if the same person came and told you, I have X amount of money, I want to invest it, what do I do? The simplest part would be, well, if you want to invest in the market, here's what you do. We build a portfolio of funds. This has become commonplace and easy to give, because with the availability of data, somebody to construct a portfolio becomes much easier. I would say the threat here is of the relatively the larger advisors who are sitting on the borderline, whose advice has no differentiation at all. That is where your problem is. Unfortunately, there are too many such people, where there has been an ecosystem of people who have given advice in the past and who continue to give advice. I'm telling you, most advice is boring. Just stay invested. I mean, I have to charge people if I have to give that advice. But at the same time, it is not value-adding advice in any meaningful way more. But because it takes me time to just look at a person's portfolio and say, well, you know what, you're doing the right thing. I have to charge for it. This me is gone, I think, in the world of AI. Where the AI can look at this and do this much more meaningfully. It's at the edge where AIs and humans become, valuable. So AI might replace humans in a lot of cases. In some cases, you're still going to need it. But it means also that it's going to be the same way doctors now are afraid that their patients now look up everything they tell them and say, why couldn't I have this, some chondrosis or something like that? And the doctor's looking and saying, you looked it up on the internet. And then, it comes back. So tomorrow, every financial advisor, did AI give you this advice? Because now I have to help you understand not only what I want to tell you, but also what AI wanted to tell you and why it's different.
Okay. So, well, thanks, Deepak. Vashish, do you have a slightly different take on this? I mean, I felt that you could argue these things either way. So when Deepak says your AI will tell you either way, isn't that also?
So AI has a psychophancy problem. So it a lot depends on how you ask the question and how much context you provide. So with the same person, if they were trying to do this themselves, they must have said, I own this is my situation, what should I do? If you stop there, then what happens after that depends on which path you take. So it can tell you, yeah, you should sell. and it's a coin toss. It could have as equally probabilities there that it'll tell you, you should just keep it. Then how that conversation flows, your decision may depend on that. Versus if the same question came to say Deepak, because or you, and you have the context of this person, you may ask them a lot more questions, or you may already know those answers, and you may give that context to the AI, and then you may get a very different answer.
Okay.
So the same question, the question is still the same, final question, but with different context. So the way you have engineered the context versus that person has done it may be different, and they'll give you very different answers. So a lot of it depends on how you are asking the question, what is it that you want, what is your personality. If you are easily satisfied, then you'll just take the first answer and just move on. And how important is that decision to you? If it is like, if it is 90% of net worth, maybe it's a very important decision for you. If it was 10% of a net worth, maybe it was not as important a decision for you. So it all depends. So which is where the human in the loop comes in, because if you are the one asking AI questions, who's the one accountable for the decision? Then it's just you. So the more depth you've gone into that making that decision, the better you feel about that decision. Versus say a human, an advisor, then at least you have somebody who is taking that accountability, especially if it's a fiduciary and they're required to do the best thing. But here's the problem, that most of these firms who will do this will probably, because the way AI is proliferating everywhere, most people will be doing this with this information. The maybe not the founder, maybe not the senior manager, maybe not the senior RM doing this, but it'll get passed on to some analyst who may end up just using the AI and doing the bare minimum for it. If each org is not training their people, then the staff will do this. And the average first response that client may get will be the same average response they would have gotten themselves. So even to charge a fee to give the boring advice of stay invested, even to do that, you still have to use AI responsibly. So it's a weird situation.
Okay, Vashish, I'll stay with you for the next question. A few years ago, you were deciding whether you wanted to buy a house or not. And I remember, in a sense, again, you can argue these either way. It's often boils down to so much of your own.
And this man makes it more confusing.
Yes, with his very, very prolific writings about this subject. But the fact of the matter is that at some level, this is a subjective choice. It's like saying, should I go out and have Indian or Chinese food today, or some version of that? Then it's like, look, what do you really want to do? And then you're going to decide anyway. So you might as well just expose your preference to yourself. But did you use AI to make that decision a few years ago? And when people, the next person who's listening to this, who has to decide rent or buy a second house or whatever it is, should they be bothering to talk to other people, or should they just be using AI on this?
The use case for AI is as a sparring partner to just refine your own thinking, because some of these conversations you can't have with most people. Don't have a person to have these conversations with. Like if I ask my dad, should I buy a house? Of course you should buy. I should have bought it 10 years ago.
Okay.
Right? If you ask Deepak, he will say कि नहीं देखो Excel में calculation है मैंने सब. He made it in 2010, I think. It still exists. It's a very complex thing, and then there's a lot of nuance in there. Like, are you just going to invest it in the market, and then this and that and so on? At some point, I think the natural, intuitive understanding that we built as we answered these questions at Capital Mind it was a constant discussion in our forums for a long time. I think in the end it was like, look, if you can afford to buy that house, basically if you have the cash to pay for it, you could buy it, because then you're not leveraging yourself. So that's where I think even Deepak concluded at some point that, look, as long as you're not leveraging yourself, it's a different matter. But just to arrive at that, even if you know all the math and you know all these arguments, just to arrive at a decision, you still need to go through that process of introspection. And this is where AI is useful, because then, yes, it has a psychophancy problem, but you can, put guardrails around it, and you can keep brainstorming. What if this happens, and so on? What if I make this decision? And is the value good enough? Should I be waiting for a few years, and so on? So all these questions, nobody else has the patience to listen through all of this, and that's the problem. Even with the advisory question, who on the other side has that patience to do this at scale?
I think
if you have a very boutique firm which services 50 people or 40 people, and there's one person to handle 10 people, that will only happen at scale if you're dealing with clients who you make a lot of revenue from, and which means that their net worth has to be higher. So somebody who has 5-10 lakhs to invest, they will never have access to somebody's attention. which is where these kind of things come in. So your own introspection, and a lot of it depends on the quality of your own thinking. If you are not interested in the topic, if you are not curious about the answer, you will get the average response, and you can just take it and move on. It's the average response. I mean, the average advisor probably would have given you the same advice. So you're not worse off, not better off or anything. But if you really want value out of it, you have to put in the work and use it as a tool to improve your own thinking.
Yeah, I'll add a little layer to that. The context that Vajesh talks about is important because the question of should I buy a house or should I sell this house, and should I buy this house or should I sell this house, has connotations of, oh, what is this house? What's the area around it? Is that area getting a metro station in 5 years? Maybe there's a plan in place. Now, typically, when you go to a broker or a friend who knows this stuff, they might come up with this information saying, I know there's a plan. Yeah, the metro station is like 100 meters away. It will do well in 10 years. So you might as well do this. And, so there is a contextual answer to it right there, right? But AI can be that context because it can know if it wants to. For instance, it's a dumb AI in the beginning. But then when you say, listen, go around, find me plans that tells me of all the infrastructure developments around this area. It might find things over there that says, oh, well, you know what, this is going to come here and this is going to come here. There's a plan, there's a master plan to be in place, which your own Googling would tire you out. Because you just don't have the patience or the energy to do it yourself. So it says, oh, well, find me everything. And then it goes and finds everything, puts it together to you. Now, having an assistant like this who does not get angry with you, who does not need food or shelter beyond the tokens that you keep buying on it, and who does not have the impatience that normally people would get frustrated with. All of the stuff that's got automated. This is like saying, listen, what I could not scale earlier, because it was too individualistic, is somehow possible to scale now because you have the assistant that allows you to scale on everything. But perhaps the personal finance problem comes down to that. Does everybody need to buy a house? Well, politicians may say yes, and other people financial people may say no, and socialists may say why nobody owns anything. I mean, on top of that, right? But then when you get to the, should I buy a house in this region? Should I buy a house when I'm 35? There are some collective answers which fit a lot of bills, but then there are individualist answers. I personally wanted a certain size of house. I just could not afford it for most of my life. And I realized that the house is actually not a financial expense. And I've said this in this thing, you should buy it, you can afford it because you want it. It's like buying a car. But it's not that it will ever need to be this financially blockbuster deal that you have done.
Just to add to Deepak's point, like when my own decision making, it is my training as part of being in Capital for so long, and Deepak has driven this home. It's like you look at a house and expense. So the moment you take that dimension away from the decision, that you're not buying it for appreciation of that asset, you assume that as a cost, it's an expense and it's gone. You don't count it towards it. Like I track things on M-Profit, there's no entry for a house because I don't care. I know the price has gone up because some neighbor has sold a house, but it doesn't matter at all. So once that dimension is gone, then your decision making is very different. But that's the thing, that context, you need some context, somebody to provide that grounding in that domain, which is where some advisor may come.
And it'll help because I think give you this overall sequence. The internet as it was in say 2018 is largely human generated articles, web, context and all that stuff, and data. Data is numbers.
Dead internet theory.
The dead. So
what was it?
Which is
that after a certain point, everything else is now more and more of it is AI generated.
Going forward,
Going forward. So there's no point on training on this anymore because there's very little of human generated content that exists.
Which means that increasingly, as you get to a point where 50% of all content is AI generated, the models that train on this new data
will be worse.
Are basically
it's like photocopy.
So you're getting the same input over and over again, and therefore your input gets more crystallized towards whatever the AI generated first, and then any alternative opinion therefore becomes valuable.
It reminds me of index funds and ETFs.
So when index funds become super valuable, they will be, they will become
super large, which they have in the US apparently.
Which they have, yes.
Happened,
and at some point, then there will be value to people who are doing something different. I think that point is probably further down the line, and right now we should use it during its initial years and help on it. But yeah, the issue with personalized advice, the issues with this thing, and with all of the individualistic context based stuff, think of it as whatever you feel a human being does not have patience for, the AI does have patience for.
But there was a time when you would go to, say, an expert because they just had data you simply didn't, or it would be too painstaking for you to get it, right? So that was one. Then it seems there was a time where what do you do with this data? How do you analyze this data? That became the reason you would go to people, because the internet had made the raw data or the simple data available. Now what you guys are saying, that it's going to some version of your context and some judgment that that person has. So however, I do feel that, look, these models have been getting better every few years, right? 3 years ago, this thing couldn't do math. Now it's making websites for me and giving my son practice exams so that he can do well on his quiz next day in school. So these things are getting better. Don't you think in a matter of time, it'll be like, hey, I want to buy a house. What does Deepak Shiva say about this? Or like, isn't it just all the things you're saying that right now the human adds? Are we just 2 years of model developments away from the humans not needing to do this anymore?
It will emulate people, and we can do this today itself. Like you can emulate Munger or somebody else and say, boss, how would they analyze this thing? This is very common, right? It's not even new anymore. So there are already these frameworks in place. So the question is, who designs this framework? So we have to move from information to judgment. Information is easily available. You can, for example, if you have a mutual fund portfolio, you can just use MF Central. It'll give you all the data in a structured way. You can feed it to any of these tools out there. It'll put some analysis and give it to you. The information is very cheap nowadays. Question is judgment. And who applies the judgment? Whether they have the ability to exercise that judgment. And ultimately, where does the buck stop? Where does accountability lie? Because you could say AI could do all of this in theory. But I don't see any path to this happening formally in any way, because a regulator will say, but yeah, who gave the advice? Is it the AI? If the AI gave wrong advice, then what happens? What if the AI has a conflict of interest? For example, if it's a US company and it's systematically telling everyone to sell certain stocks.
Or invest in the US.
Yeah, whatever. Right. Right now there's a big trend, right? Everybody wants Indians to invest in US because Indian market's not doing well. So how do you know? You can't apply these tests to AI. So a human has to be there, and that's where I think the natural break will be applied, which is accountability. Like, who is responsible for the outcomes of decisions made based on of these things?
Fair. Deepak, anything to add on this?
So I think, for instance, if you said AI can generate a building,
Blueprint plan
and all that, and you build according to that blueprint, and the building falls down. This is the best AI in the world. It did account for the soil conditions during rainy season and etc. etc. Who gets the blame? You can't blame the AI. It's like you can't arrest the CEO of Anthropic because India.
I'm sure someone will try, but
and he will say you didn't provide the context. You should have put this,
which is true.
Which is also true. So and beyond a certain point, we find out where our context stops. Right, when we make a decision, we could endlessly look at inputs, but at some point we stop. For instance, you're choosing between two little, let's say, shirts that you want to buy in a shop. Yes, I could go to every other shop in the mall and find similar shirts and weigh the price and say, this is the best value for money. But beyond a certain point, we're like, dude, our context window stops at my ability to deal with shirts. So I will say, I'll take this one. It's suboptimal, but I'll take it. But if the shirt turned out not to be the best one, it's my fault and I take it and I deal with it, right? We can't do that in AI. So AI has the same problem. AI, like, you gave me this context, I told you the answer, and of course it's a suboptimal answer, but so what? At some point, going down the line, we will have to find humans that own these problems, which means we are paid to take responsibility for the actions we do using the same AI that you would otherwise do, but you don't know who to assign responsibility to. So the advisor is literally the guy, to a certain extent, that stands in front of the firing line when things don't go to plan.
But what recourse do you have? Like if someone tells you in good faith, we have told people to invest in strategies, and then sometimes they don't always make money, and they sometimes don't do well.
Somebody has to make a decision.
Yes.
That who do I want to take advice from? If I'm okay to take that accountability, I'm fine with using an AI.
Yes.
But I'm like, I don't have the confidence. Even if I used AI, I still won't know if it is right or wrong. I still need to ask someone, which means you are a person who needs. So now, do you have the ability to judge whether this is a good advisor or not? And there, the AI is actually useful.
Oh.
Because using AI as a brainstorming tool, you can be more prepared when you are kind of assessing advisors to hire. Right? Otherwise, you will just go and you'll listen to their marketing page, look at their fancy website or app, and be impressed and be okay. But an AI can prepare you better because by saying, "Oh, this is my use case. I need to I want to talk to 3 or 4 of these people and see who is the best fit for me." And the AI can help you refine your own thinking and come up with the right questions to ask them, or give you a framework, or you can develop it with the AI. That okay, this is a framework how I will decide who I want to go with. So that's on you. So AI is there as a tool. I mean, how you use it depends on the person.
What's this other example? Yeah.
The other example is, I'll give you, our PMS business is trying to figure out how to service NRIs.
Yeah, in fact, we're doing a whole podcast series on it, so I
Right.
know this quite painfully well. So
And for that, we had to do a lot of research on how to service NRIs from various jurisdictions. So, there's US has its own nuances, Canada has something else, New Zealand has something else, Australia has something else, Singapore, Hong Kong, European countries, Middle East, and so on. No, this is where our team has been using AI quite a lot to do a lot of the research, the groundwork. And over the last 1.5 months, they have put together a note for each jurisdiction and they have run it through AI multiple times, validated each of it, gone to the source material, read it. Because otherwise, if you had to start from scratch without AI, it will take too long. Like what Deepak example was giving, that if you have to do research, you will just some time on Google, just give up. Right? And here, because it doesn't get tired, you'll keep running deep research on these things and keep finding sources. At some point, you'll stop saying, okay, I have enough information and I think I'm very confident this is what it means. And then you can stop there, right? Now we have that version where we are fairly confident that we have understood each of these nuances. But then we reached out to one of these large companies who do this kind of work and asked them, look, we have this, we want you to look at it and tell us whether this is correct, not correct, if it needs to be changed, and so on. We need some authoritative opinion on this. What we got was, okay, we will look at it for every jurisdiction. For each jurisdiction, there's a rate card. So US X $1,000, for UK $5,000, and so on. And then you add all of this together, it adds up to some 30-40 lakh rupees. Okay, to do what? To assign a level of confidence to our existing research. Saying whether this is correct, not correct, to what it is correct. They won't give you on the letterhead. They won't take any accountability for it. They just want money for lending their name that we looked at it. So this whole business kind of existed because decision makers want to hedge their decisions.
And the research was too painstaking for anyone to actually ever get done in-house.
So you will say, yaar, hire somebody or wo karke dega. And then jo bolega, theek hai, uske basis pe we'll make a decision. So that's why these companies, a lot of this activity exists because decision makers want to hedge their bets. Like, look, I don't want to bear the responsibility of this decision I made. So let's do a committee and then let's hire some consultants. All of them will point to the same direction. That way, if something fails, oh look, we at least went through due process and hence we failed. Now, if we are okay to take our decisions, like we have done our homework, we understand what this means, let's go ahead. So that is a decision we have to make. Whether we are okay to be accountable for this, or if we made a mistake in understanding certain thing, we won't have anyone to blame for it. Because even if that expert gave us an opinion, it's very likely they also missed something. And they could have also been wrong. And it has happened. We have had very highly paid consultants give us wrong information. So that could have still happened. But at that time, you'll have somebody to point finger at saying, tune galat bataya.
Okay, fine.
And you will have, like, if the board pulls you up or somebody else pulls you up, your client asks you, like, look, we did this, they gave us a wrong input, hence that's the problem. You'll have some excuse. Now you won't. But as long as the world is okay with taking accountability for their decisions, this is where a lot of this fake work will go away and it will impact
so I'll
white-collar work.
Get on to work actually as the next part. But I have one last question I want to ask about how AI and your money and your investments. I think you had said that Ken Griffin was of Citadel fame was very skeptical of AI a couple of years ago, but now he's no longer as skeptical and is quite bullish on it. And I think your friend Nitin had posted Jane Street has this what was it, some liquid cooled enormous
GPU cluster.
and he said, so what's your edge? I mean, I think that was the tweet.
And the only edge you can have against it is not trade that time frame.
But this is the question I have: is we're already in a world where if I may say, the rich are getting richer, or the wealthier, well, to some extent, and the wealthier, the people who have access to better, say, technology or whatever, are able to make. I like in the US-Iran thing, apparently Anthropic really helped them with deciding how to reduce their cycle time on deciding targets to attack and so on and so forth. So, do you think AI will create the situation where what were already the biggest and most successful firms like the Jane Street, Citadels, and so on of the world, they will just become so much more successful that they will eat out all the alpha or all the excess profits from the market, and the rest of us will not be left with, we'll say, any ability to outcompete them, because now their bottleneck is no longer even the number of employees they have. They can go after even a 1 crore market somewhere, because it'll just be like some servers doing it rather than having to put one employee on it whose salary is more than that size of that market. So do you think that is something that is going to hurt us? And lastly, I know you've already covered it, but if there's any like actionable advice or tips you would give to people where in this world where these tools are getting powerful, how would you use AI to improve your financial life, your investments, optimize expenses, automate some workflows? What would you get done? I think both of these questions are on. Deepak, I'll start with you.
Okay.
He's done the last.
Is the availability of this technology and therefore the resources people put behind it a major edge taker? I think the answer is potentially no, because there are enough people who beat the market today without having these edges. And the edges are necessarily in different time frames, like Vashish said. It is possible that today to trade in a sub-microsecond or a microsecond time frame, that I have to compete with someone who has servers in the NSE, BSE and all that stuff. But there are clear pricing differentials in a longer time frame, maybe in days rather than milliseconds, and months sometimes, because there are certain things that are obvious about a company. I'll give you an example. It could be that a company has announced a lousy set of results, but in its results, it's like, listen, I know where we are, but we've got this new plant, and this plant is coming on, has already come on, and now it's starting to produce stuff. You look at it a little more carefully, and then you look at it and say, well, you know what, in 6 months, this plant is going to turn over much more than the current turnover of the current company itself, and added up, this is a fairly significant leap. And while analysts look at the current results and the markets are falling, and this is where Jane Street is probably beating the daylights out of you and trying to figure out what's right, this ability to think that one layer forward is not maybe in Jane Street's time frame at all. They're not even involved in that thought process, and then the risks on those are significantly high enough that me doing servers that cost a lot of money to take these trades, which are infrequent, which have a large amount of variable, risk, because so many things can happen in the middle that you don't know. Somebody like Jane Street is not going to be involved. But if it's not plottable in a mathematical equation, I'm not taking this.
They won't bother.
And here the risks are too many. So you might actually migrate to a different time frame, understand where your thought processes are.
So you're saying that time frame is your edge, and even in a world where these people are super sophisticated and whatever, you can just not play in that segment and take a different set of risks and be well rewarded for that. Okay.
And I think also that the idea of an edge in the financial markets is different for different people. I don't need a massive edge 99% of the time if I am not actually involved in the markets. I mean, for instance, perhaps that index fund, perhaps the fixed deposit also is good enough.
Yeah.
And this is okay for me to not have an edge as long as I get the returns that I want, right? You don't want to take over high amounts of risk in one space when you're already taking it in another. Maybe your career has got some risk and maybe other things and so on. So you want to balance out the suboptimality of approach automatically gives you an edge over the Jane Streets because they will not venture into things that are suboptimal.
Agreed.
Whereas it's like, in the AI world, it's like saying, I won't use the best model of Claude. I'll use 5 levels below it. I'll use an open source model because the compute it gives me and the compute it costs me is much lesser, but the results the inference gives me is good enough. It's like saying the car does not need the highest end chip. The minute you don't reach the cutting edge, suddenly the big players who are all participating in the current edge, in the extreme and at the edge, are no longer your competitors, and you can still win by win by your standards, by your approach.
So, Vashish, do you have anything to add on this one? So, I mean, Ken Griffin's using it, Jane Street's using it. They've already won the microsecond game or the nanosecond game. And I guess they've also won, Jane Street has very much won the 0-day option game. I know that, even though Indians refuse to believe them. But regardless, is investing just now harder for the rest of us because the people we're up against will just keep getting better and smarter and richer and endlessly be able to pursue markets?
Depends on if you're in those shorter time frames where technology certainly has a lot of edge versus in other time frames. So, like one of the best performing funds in India has one of the lowest turnovers in their portfolio, lowest churn in their portfolio. So they are like not even making decisions. Okay. So they make few good decisions, and then they have the patience the persistence to just stay with their choices. So that is their edge, behavioral. So a lot of it is behavior, which again I don't think AI can solve for. It can help, but how would it help? Like, do you imagine fund managers having like
AI therapists
telling them they are feeling low, that my portfolio is not doing well, what should I do? Should I change the strategy? And AI is constantly, and we have created the AI and we have written the prompt for it, which says, always say don't do anything. Will if we roll it out across the AMC industry, will we have less churn as an industry? I don't know. Okay. So a lot of it depends, and there's a company called Take-Two which makes a very popular game called GTA, and the GTA 6 is supposed to come out, one of the most anticipated games of all time. And the CEO was saying, look, AI is backward looking, but creativity is forward looking. So the ability for a lot of game studios to clone GTA and make it has existed for a long time. Doesn't mean that those studios have such a hit game as them. Same thing applies to movies as well. The things exist today. Even if you look at a lot of the short AI videos that come out, they all exist. Doesn't mean new studios have cropped up that produce hit movies. It's still the same set of people. So it will take, the edge will stay human at some point. Whether it's behavior, whether it's a new way of thinking about it, whether it's the way your company culture exists, is the way you're able to attract talent, and then they apply these tools. They may apply, but then how will you have the talent to apply those things? So it'll stay human at some point.
So you were never going to win the IQ battle against Renaissance Technologies anyway. So that was never going to be your edge.
The core philosophy of having this edge concept is the fear that if the great people are doing this, nobody else can, because if there was an opportunity, they would have found it. At some level, the answers to maybe the creativity comes in over there, right? It's like the answers to that you can be different and succeed have always existed in the world, whether it is obvious today or not. There was always great companies in a space, and somebody from the outer side came and thought differently. And this thought differently, can it come from AI? I have my sincere doubts, because AI is the sum of knowledge that we've built, and it took someone to think outside of that box and build it. I do think that can help you in that journey. But to think that, listen, there is something here that is completely out of the ordinary, not yet discovered, completely different approach, possibly at best it's giving me inputs, and I'm the one thinking of that new idea, and that creativity is not going to come from the AI itself. So this edge thing might just happen when you say, well, it exists. No, it can't, because the rich people could have found it already. No, but it exists. No, it can't. You don't get it. But I'm like, dude, it's a 100 rupee note. It's lying there. And
just pick it up.
We in Capital Mind have done this many times.
We have done it. And
we ourselves have come from left field. A bunch of people with almost no background in the finance industry that have built something. It should have never been possible. But if it was possible for somebody, then it's possible in the future as well.
Point taken.
And on this edge point, there's a 20-year-old woman who won a lottery in Canada, where the choices were either take $1 million or $1,000 every week for the rest of your life tax free.
Oh, okay, interesting.
Right. The maths will say you should have just taken the $1 million, invested it at 7% in the markets or whatever, and it'll grow to some ridiculous number over your lifetime.
And you learn 70,000.
And you're 20 years old, right? So you have
correct.
a long way ahead of you. She chose to do $1,000 per week, right? Because whether it's right or wrong is a different matter, but behavior-wise, she doesn't know about finance. Obviously, she's too young. Doesn't know much about what will happen with money or what to do with $1 million. And if you look at data, I think some 30 or 50% of people, lottery winners, go broke within 3 years or 5 years. So they don't know, they spend it poorly.
Yes.
Or if you had the money, you will, I don't know, give it to some family member, invest in some boyfriend's business or some nonsense, and you'll probably lose it. So now you have $1,000 every week coming to you tax free for the rest of your life. That is security that you can then leverage to do something else. So the decision needs to be seen in context of that person. Like, they optimize for their peace of mind. Look, like if somebody said, ki, look, 2 lakh rupees a month for the rest of your life.
That's worth a lot.
Right. Yes, because we are in finance, we'll do the math and say, give me what's the NPV of this, and then what if you give me that much, and then so on. I will invest it like this. But that's the thing. It's the choices depends on the individual, and they're optimizing for their own thing. So the AI will give you answers. Whether it's right, wrong, depends on the context and who's asking the question.
So we've sort of closed out this first part of this conversation saying it's things like context, things like creativity, judgment, behavioral considerations. These are probably some of the things, and the human element, the human edge, or a preference for dealing with a human rather than AI, that sort of like shine through as you're looking at how AI should help you with your money. I'd like to now move on to another fear which we have, which is that, look, US companies, at least, have been very, in fact, I think I'm a bit skeptical about their stated reasons, but they're laying off a lot of people. I think some of this is just COVID era bloat or overhiring, and they're using AI as the pretense. But some of them, at least like Meta, perhaps you could say, are actually choosing to lay off people and invest that money in AI related infrastructure, if I'm getting this example correct. So I think what this brings in as a bit of an uncertainty to all of us is, every time you've made financial plans, whatever you've done, they have mostly relied on a steady income stream, where the absence of a steady income stream from, say, a kid's birth or something is an aberration that happens every, X years in your career, but not too many. Now, I think in this world, the fear all of us have is just, again, looking at how well these models have become better and better doing things. And now eventually agents are apparently going to be tirelessly doing all sorts of things for us, even within organizations and so on and so forth. I think all of us are a little concerned about what role we'll be able to play in our companies, whether we'll continue to have the jobs we have, whether jobs will pay as much, whether leave alone income's growing, but will we move more to gig-like operations where we're just setting up some scaffolding for then agents to do things, and then we may be out of a job till the next requirement comes in. So I think I'd like to start this point of, how do we deal with the fact that AI, I mean, you already talked about how you use AI for your current investments, but how do you deal with the fact that AI might be coming after your income, and your income, which behaved like a debt instrument all this while, just paying you back interest, is now, the income itself is like an equity instrument, and you might have these moments of like feast and famine. Deepak, maybe starting with you.
Right. Oh, so, this is interesting because we've, so there's management, and then there's technology, and there's engineers, have always been in high demand. So therefore, we automate stuff so that the workers get automated out of their jobs, but we generally don't lose our jobs.
So far.
Now we are losing our jobs, right? We have tried to introduce the concept of an emergency fund, saying 6 months. Now I say, maybe in the context of AI, you need 12 months. You're not going to find a job for 12 months. And you may need to change what you do, which means you may need to invest in yourself to get enough skills to land the next job in the first place. So it's 12 months and then some. You might need to use AI to be relevant in your own organizations, because adding value now says, well, I got to do stuff that adds value to my organization, and I can't do it. I mean, they will not give me a team anymore. I may have maximum 1 or 2 people. Maybe just the 3 of us need to do things that are fantastic. We should use AI. Perhaps there's tokens, perhaps there's something else, whatever it is, you build it together and then scale. There are people who have to make that leap. There are other people who simply cannot, because they either don't have the skills, they don't have the time, they don't have the ability to learn.
They're too fed up.
They will, at some point, lose jobs and find themselves in lower paying jobs simply because they don't have the skills to match. And that is also, I think, part of the thing. I mean, we have to deal with the fact that our salaries may fall if we aren't skilled enough to be able to generate the same kind of value that we had earlier in our companies. But the way you should think about your life in general, and I say this, we have benefited from a bonus that we got on the upside. The same engineers, you got ESOPs. Those ESOPs suddenly paid off many multiples of your salaries, which was otherwise not possible in a worker setup, right? This was a different problem. You didn't need to save enough, because if you got this one bonus at the end, what is the point of saving anything in the first place? This is the exact opposite problem. You're not just not getting a bonus, you're getting periods of no income. So how do you change your approach to that? If the question was to save less earlier because potentially you'll get a bonus, then the answer must be to save more for these opportunities when they arise, and actively create mechanisms that you will evolve into so that it becomes less AI dependent. So for instance, you might change your career role completely. I did this in 2007 when I said, I don't want to be in tech anymore as much. I want to be in finance. So I had to switch over. And people today, and I didn't think of that as a big deal. I was like, okay, I'm 31, 32 or something like that. But so what? Let me go do this. A lot of people come to me and ask me, Deepak, how do you make the switch from being an engineer to a finance person? So I'm like, you just switch. I mean, it's a new skill, you learn it and then you figure it out. But there is this problem. Oh, when you did this, you didn't have an income for a while. Yeah. Well, what do you do? No, I had savings. No, I ate into my savings. And this is now suddenly like, as if I've said something that is sacrilege and that people have to go to the Ganga to bathe, and after that, it's just because, what do you mean, no, I have an income for 2 years? What will I do? Like, don't you have savings? Well, I do, but
they're supposed to go up every year.
Yeah, I mean, so then your savings are not savings. I don't know what they are.
It's a vanity investment.
Yeah. So I wasn't able to get this until I realized this is something we've invented. Okay. We've invented the fact that regular income is the only thing that makes any sense, and we shouldn't.
And that money needs to be hoarded.
That money
and this value needs to go up, never be consumed.
Yes, and therefore, if you reach a certain value and you consume it, you are somehow a less person for spending it on the exact things you saved the money for in the first place. I want to buy 1 crore car. Okay, fine. I mean, I have no judgments. So fine, buy a 1 crore car. But you know what? This takes my portfolio down from 10 crores to 9 crores.
Yeah.
What did you think would happen if you bought a 1 crore car? Yeah. So, I mean, it's to deal with it. This is what money is for. So now you have 9 crores in rupees and 1 crore in cars.
But then, as you know, they fall by 30% the day you buy them.
I mean, technically I say that you have 9 crores in rupees. That's all. But that's what the rupees were for. I mean, what's the point of earning all this money? But AI, the world of AI has to bring this notion into the money you've got is not going to stay with you permanently if you don't evolve. I think this is so true of everything. Okay. And it's come to a particular population that has never had to face this situation before.
But let me bring this down to the investments then. So you either have been saving and do you say now what? Should you also have more gold? Should you make sure that your house is paid off so that in case of moments when, say, you don't have a job, you don't have an issue with the EMI? Should you be having more risky bets, more small caps, so that when the growth happens, you capture more? How would you, at a high level, of course, I realize everyone has to have a different answer, but would you, or will the emergency fund just go up? What do you tell people to do with the money they already do have saved?
Yeah, I would say that if this is a concern, and it will be a different concern for different sets of people, as the concerns become larger and larger, your emergency fund / non-risky investments need to go up, and therefore plan for obsolescence of yourself more than anything else. But to a bunch of other people, it will present an enormous opportunity. I think AI will create 10 times more opportunity for us, even in the finance space, than it has, because in automating the jobs that took a lot of time and therefore need lesser people now, there will be 10 people like me rather than one Deepak Shanoy doing 5 things. Yeah. So if there are 10 people like me, that provides opportunities for 9 other people and 9 other, or 900 other people. Perhaps I'm getting competed out of this problem. I have to deal with this in a different way. It just provides me opportunity. You have to find out what that is. And sometimes to harness that opportunity, you're going to need money. This is the same way I think of our children getting an education which is a different problem. We're paying them to get an education, which is almost completely invalid from day one when they graduate. Not because of anything else, but because the world has just changed under them. We probably need to now save for not just their education, but also the seed capital they're going to need after their education
Gosh.
to get a real education. So it's that thing.
Okay. So I'll move on to Vashish now. But Vashish, if you know, so a lot of Deepak's answers are based towards, say, his life situation, where in a sense he's already made it in many ways, right? He's already has a certain level of net worth, has a certain reputation, has a thing. But there are people who are probably listening to this episode who are like in their, I mean, just early in their career. So they're like, what, 10 crores versus 9 crores? I've tried to save the first damn crore or something like that. And so how would you answer this for them? I mean, they don't even have, they may have some decent savings, but not enough where, say, moving 5% more from equity to gold or some other thing will make any material difference.
Yeah, if you're in your early part of your career, I think there is a reckoning happening in white collar jobs for sure. As people inside our own organization, as the people we interview, we talk to peers and so on. There's a reckoning happening across the board in white collar jobs where everybody is fearful that what is going to happen. And there are two things you can do. One thing is you use AI like everybody else. And since AI takes the output of AI used in a mediocre way is the average, more and more people will just use it in that way, just so that at least I'm using something. And their output will also be average. So we have this, if you take the bell curve of skill sets, the bell curve will become narrower and taller as more people converge towards the average, because they're all using AI in very similar ways, and very, they're not putting in the effort to get good outputs out of it. Which means that people who are more motivated, more driven, who recognize this and they say, okay, like this is a great time to be learning things. Like AI will make it easy for you to pick up anything you want today. If I wanted to learn about something, I can just tell AI, like you said, you made a course for your son, saying, okay, I want to teach this math concept. I don't know. Maybe there are 5 different ways of, one way will get through to him and he will learn that quickly. So these things you can do now. Same thing for yourself, your own skill set. If you want to learn something, AI will help you learn that much faster. So people who will recognize this and understand how they can add more value in their organization, in the industry they work in, and so on, they will get recognized, because there is just a lot of AI bullshit all around. So the average AI output is shit, and the more you use, still, and the average person using average AI, if you're not paying for Claude 4.7 advanced adaptive thinking, you're using the free version, it is quite horrible. So a lot of emails now you see it and you're like, yeah, to AI ne likha.
And
There's so many, every day we get some 20 emails for internships and AI, and when you see it and you know it is AI, and like nobody's inclined to respond anymore. And some may stand out. Maybe something written in like a
non-AI language.
non-AI, 4 bullet points saying I did this, and maybe can I call and see and something, maybe that will stand out. So I don't know. So the average is so poor that in terms of communication, if you're applying it to, I don't know, to write code, to putting things together and generating some outputs is a different matter. But the average output of AI without any thinking applied to it is not that good. So those who will learn how to use it well and apply it to their industry, to their own particular domain, will benefit from it. And that's how they will stand out. Because otherwise there's no point. Like every new engineer who comes now can wipe code any programming problem you give them. Right. So how will they stand out? You ask them, why did you do it this way? This is my problem. In our stack, this is what we need, and these are the problems we need to, do. Can you solve it? And if that person has only vibe coded in their life, they will have no answer for you. So if you have 5 of these and one person has put in the work to understand how things work, has read the book, or has listened to, I don't know, the went and read the forums and seen the GitHub issues and the history of that problem, and he gives you an answer, that person will stand out. So it's, yes, there's a lot of AI, but it's also for the driven person, it is easier to be recognized than before.
So in a sense, your salary was a reflection of your human capital, and now you need to improve.
There's a lot of inertia in white collar jobs.
Yeah.
You just get into that certain industry, and there's just inertia there, so you'll just keep there, rest and vest. So you just hang around and you'll get taken care of. That is going away. That is the bloat that's going away. It's a de-bloating exercise more than jobs going away, and probably a reset of compensation. People who do real work will probably get paid more, like a plumber or a carpenter. People who have real skills, who solve real problems, probably should be earning a lot more in India. They already do in other countries. In India, they may not be earning as much. The baseline income may not be that high, but that probably will go up. And the average person writing making a PPT or an Excel spreadsheet, probably that income will go down.
Okay, fair. Now, both of you have so far actually hesitated and have not really answered this. So I'm going to try it one more time. I get it. So we'll come to how you can use this to improve your human capital and all. But what do I do about the savings I currently have? If I'm saving a certain amount of money per month, both of you have made me kind of nervous about whether I'll continue to save that much for going forward. And if I already have some money saved in a certain asset allocation, I'm wondering how it should adapt to the fact that now my income may be a little. So obviously the advice should be, you should be one of the people who are using AI well and make sure your income keeps going up. In fact, it'll go up by even more. Maybe that is the right answer, I guess, in one way. But on the other hand, there's the fact that you may not be that person. You may, not for lack of trying, or you just make a few bad decisions or whatever, or luck doesn't go your way. So what do you do with your investment?
So I would say by and large depends on where you are. Your early stage in your career, you have the ability to make changes. You probably don't have a lot of money.
Yeah.
So my telling you to move to debt or it would be like pointless because it's worthless compared to what you're going to earn for the rest of your life. But you got to make that change which says, well, you know what? Equity that's valuable will come from companies that make real differences in your life. Then those companies could be large cap, could be mid cap, could be small cap, and you still need that mix in your life that says, well, you know what? This is not my primary business. Let the market figure it out. I'm going to have that because I have a long term to invest. I don't have to make those decisions on which is the winner today. Let, say, mutual fund manager make it and all that stuff. I'm going to invest certain amounts because this is going to beat the inflation that I would have otherwise faced because of monsoon is bad and therefore food prices have gone up, inflation levels. Therefore, things are changed. At the same time, you have to make this assumption that a lot of things will change, which means at every 5-year or 3-year point, you're going to need a checkpoint of, am I really exactly where I thought I'd be? And are all my assumptions right? Am I spending this much money? I made a plan in 2006. I still look at it and I laugh a little bit. But for the most part, it's been very enlightening to understand what was different. I modeled children's school fees based on a model that was there at that time. That particular type of school, I would have been bang on. But I chose a different type of school eventually. This was my lifestyle inflation. So I said, okay, that's a different cost. But the rest of it, like my household expenses, have inflated nowhere close to that number. I mean, for whatever reason. But because, it just hasn't. So it's just the way things are. But these checkpoints help you understand, oh, okay, this is not where I'm going. I might be going somewhere else. And those checkpoints will help you understand whether this deflationary characteristic is different or not. Now, if you already have a lot of money, I think to a large extent, your lifestyle inflation, if it is under control, I mean, you're not looking at suddenly spending a heck of a lot more money, you might actually do very well with just the amount of money you have. And you may not need that high equity mix that you have in your life anymore. You could go more hybrid in nature. You could go downstream and said, I want to diversify. You might need to do things like, I don't care about the overall. It's like saying, why does America people very happy with a 6% or 8% return? Whereas in India, even 12% sounds like, oh, that's okay. Now that's because relative inflation has been higher in India, right? But currently, Indian inflation is lower than America's, and it's been so for a good part of the last 2 years. I mean, it's been close. But yet, our Indian values will take time to change downwards.
The inflation expectations.
Expectations, and therefore our return expectations. And the US expectation will take time to run upwards. Our personal inflation levels are not directly proportional to this, but to a certain extent, if we know what our well, I mean, people tell me medical expenses have gone up. I said, okay, let me go check what a heart stent operation costs. And it hasn't inflated anywhere close to these numbers that people have talked about, maybe because of government intervention, but whatever it is. But there are some other procedures which have gone up berserk in comparison. So it's again a contextual problem. However, I think that this syncing, resyncing may be important. I don't think people should change their discipline because of AI.
Okay.
I think they should remodel themselves as how am I spending and how am I looking at themselves, and therefore build your incremental investments from here into that. And I think to a large extent today, and I'll say this, I've said this before, invest in yourself because you're the best return that you can get on your money. And today, I'm telling you, even me, I need to spend enough time with AI to understand what it can really do, because I look at something and I'm just awed with it like it's magic. But anything that is sufficiently technologically advanced is indistinguishable from magic. I think that's a saying that went in. But if it is sufficiently technologically advanced and I have some grounding in technology, I should go in and venture and see what that thing can do for me. And if I'm not doing it, I'm doing myself a disservice. Even if it costs me money, time, I should go down that route. That is, I think, the best investment I can do with my money, even if it, cost me money in terms of spending on a course, spending on the tokens. They're expensive, but or hiring a server and installing, I don't know.
So now I think we're winding up towards the close. I was thinking, how do you use human AI to either I'll open up to both of you in sequence. But given the things we've discussed so far, what would be some parting thoughts you have on how people should use AI to either optimize their investments, optimize their expenses, improve their human capital? What advice would you give? I mean, to the extent you have any on this one, discrete thoughts, given that we've heard the sort of journey through how it could impact all of these. So if you want to look for some actionable insights from this, what do you think you would do?
I think this agentic concept of it going and doing things and telling you that it's done, or building something then telling you it's done, is very useful for you itself. Sometimes to just visualize things that are in your regular life. It could be your investments, where you could help make it understand how you've invested in your own past, because you don't want to give this to some other party for maybe whatever reasons, but it's possible that your own structure kind of is different, and you talk with AI and then help it build something that visualizes things. This would usually be like, no, I can build a tool that anybody can use to visualize for themselves. But now it's like, no, it's too complicated, because some people have some weird stuff like real estate that was inherited but not really, and all that stuff. So let each person build their own thing. That can be possible now at some level, right? I also think there is value. I mean, I say this purely as a capitalist and a person who's not passing judgments. In this concept, which perhaps comes from the old McDonald has a farm thing, which is AIO, which is AI optimization, like SC, search engine optimization, because since everybody's going down into the search engine, I mean the AI world to search for stuff, why not flood the AI with stuff that will eventually surface in another model that will tell people exactly why they should be using your product instead of using whatever else.
Already happening.
They already have. I mean, so you flood AI with stuff that makes it difficult for that AI to recognize that is not the stuff that they should be telling people going forward, right?
Very ethical advice.
Whether you like it or not, this is going to happen, and you're going to need to participate in it, whether you're a business or not. That means, if the bad people are doing it, then the good people also need to be doing it, because otherwise why are they going to come to your product, right? Your AI optimization in that sense. So, and then you have to understand that you're not a victim of this AI optimization process. There's sometimes too much information. Like, for instance, this product has monosodium glutamate. Oh my God, it must be horrible for us. No, that's a naturally occurring chemical in tomatoes. Oh, okay. So, there's an outrage that happens and AI can amplify the outrage in either direction. So, you got to be careful about how you do things. But I think you can optimize your life a little better by making those decisions. I mean, sometimes it could be medical, it may be on the areas of designing your career path. I want my son to learn robotics, and I was like, what what are the options, what are the different things that exist. And then I found out it's like a PhD level course just to figure out what are the options that exist. But either ways, the conversation with AI helps you kind of simplify things down to, oh, this he can do at this age and perhaps something else at another age. So it's useful as an assistant. I think it's a very useful thing. It is a 24-hour assistant that doesn't judge. Difficult to find in these times. So it's useful from that perspective. On the financial end, I would say be careful of just using what it says when you ask it for product related advice. Oh, tell me 5 funds that I need to buy. It's going to figure out some 5 funds based on a bunch of parameters.
Or AI optimization.
Or AI optimization, as we put it. And then that might just be the answer that, you can never say no to why you should buy these 3 funds. Well, it sounds like it's a good option, right? But then it needs to understand that what is the process? Are you going to invest in it? Are you going to continue to say SIP? And so it has to build a structure for you to invest in. These are useful, important additions that you can have to your life, and your own characteristic of investing may be different. I need to invest, but I need the money after 3 years. The AI may then immediately give you very different answers, simply because it kind of exists. Downstream, your investing process should be simple and understandable to you, and you want AI to do that because you can always use AI to complicate the problem. I think in general, when you think about money, I think Vashit, I probably agree with his, wanting to invest outside of India for the benefits that AI gets, because India doesn't have anything.
It's not like I have acted on it.
But
It's just too much friction. I'm like, we'll do it.
To be fair, I think the friction was by design, and perhaps it's even going to get more by design now. But
Thank your friends for it.
Well, yes. I mean, but the downside of doing this kind of an approach is you also face the challenge that what if the AI bubble bursts? The internet bubble burst not because there was too much internet. In fact, the internet has grown many, many times after that, 2000. There was just an over-investment in a certain part of the internet that became a commodity. If compute becomes a commodity, the companies that currently demand valuations are primarily compute providers. And they might not be the winners of the future. It may be the layer above them. They are desperately trying to make sure that is not the case. But it just could be that is before them. The winners of a free, faster internet was YouTube, not the guys who made the pipes that made the internet faster. So it could be that you might see this bubble burst on valuations, and that affects your investing outside of India more than it affects the benefits of AI that you get.
Point taken. Vashish, on this, I mean, anything either on the investments, human capital, what advice do you have for people? You use AI relentlessly every day.
Yeah, I have 5x more token usage than anyone else in the company. But I think use it, learn to use it as a skill. Okay. I think we are very early in, or at least we are very early in the cycle of, India is one of the top countries in terms of adoption of AI.
Oh, okay.
Well, we don't produce the models or the inference, but we are one of the countries that are leading in terms of adoption. So we are ahead of the curve in terms of how we use it, and but we're still early in how effective we are at using it. So we have to learn to use it as a skill and see how to leverage that to make our jobs more meaningful, jobs better, create more efficiency in our work, and that's how you become that, move one standard deviation away from that median or the average person, white collar job worker, because you now have the ability, and there is no better time than now to be exploring your interests. Like if you are an engineer, you want to be in finance, today's you have the shortest path to do it. Same for any career change or any other exploration, for that matter. So it's all possible. A lot of things are possible, but obviously still very early, and we have to put the safeguards in, especially financial products. You have to trust but verify. So you can, with enough guardrails, you can say, okay, it's giving me 90% of what I wanted, but let me go and verify. Even today, I'm like, this is fine. Let me go read the source material and make sure it's correct before you act on it. So that needs to happen.
All right. So thanks, folks. Thanks for that discussion. As I reflect on it, I think when you look at the impact of AI on your incomes, If you were earlier revisiting your financial plan, say every 5 years or every decade, then in a world where your income itself is more uncertain, perhaps revisiting it at a higher frequency is perhaps one of the more sensible things you can do. And AI is probably a very useful tool to help you take stock of how your various investments scattered with different formatting styles and different file types are doing, and it can give you that journey for you. Additionally, I think AI can very well help you with optimizing your expense decisions or just understanding your expenses better, painstakingly going through all your statements, removing double counting, and so on, so that you have an accurate picture of how much you're really spending and not how much you think you're spending. With that, I guess that's it for our show. Thanks so much for listening. I think if you'd like to hear more about how we think about everything, finance and related, do visit capitalmind.in. We have a PMS where if you have more than 50 lakh rupees, you can invest with us in our strategies that range from stocks, bonds, mutual funds, and the like. And we have a mutual fund, capitalmindmf.com, where you can hear more about our mutual fund, where you can start investing with a much smaller number. With that, thanks so much, and tune in next time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.